everyone, my name is Siti Nashabika Nadira binti Isa. I'm from DPM3 S4. So today, me and my group would like to present about business plan report for our business. This is table of content. So first, I'm gonna talk about executive summary. Our firm hallmark investment product will be the Vista Total Market Equity Strategy and will be initially offered through a mutual fund that is registered by the U.S. Security Exchange Commission (SEC). Technological advancement also permit for other economically feasible distribution channels, such as separately managed portfolio for large account. The details of our particular investment product offering are revealed in another section of this plan. However, it's worth stating up front that we are extremely encouraged by a research piece to be published in the Journal of Portfolio Management that supports the philosophy behind our primary product offering. Anyznoop, a premier institutional investment consulting firm, published a study called Failure of the Multiple Specialist Strategy: The Case for a World Stock Portfolio. One of the underlying tenets is that specialization within equity portfolio management has gone too far, thus resulting in suboptimal portfolio. Vista Investor will be structured as a partnership designed to capitalize on industry research performed by one of the founding entrepreneurs, Michael Douglas, during his professional career in investment management research. Last year alone, Mr. Douglas conducted research visits at the investment office of over 30 firms. In addition, he conducted literally hundreds of meetings with key investment professionals from around the globe, either in person or via telephone conference. Mr. Douglas' team present this business plan as a start from scratch. Outline of what a successful investment management organization should look like as the industry evolves in response to political, social, technological, and other influence. Vista Investor will offer high net worth or angel investor opportunity to ownership position in exchange for contribution to Vista Investor operating capital, and for providing seed asset to establish the investment product described herein. This document alone does not constitute an offer of any type, or does it provide any guarantee, financial or otherwise, risks associated with the Vista Investor business plan are not limited to those detailed in this document. 1.1 Objective. The purpose of Vista Investor is to create value for owner, employees, and investor via the establishment of an investment management organization designed for third generation. The third generation is defined in a cutting-edge research effort by Merrill Lynch and .co and Barra Strategic Consulting Group as a pace in the investment industry requiring a special set of capabilities for success. Our team has drawn upon this study, numerous other studies, and perhaps most importantly, our own experience in the industry to define a plan for the success of Vista Investor. 1.2 Decision. Buy and sell decisions are implemented quickly and efficiently across all portfolios. Where applicable, a trading rotation is used to avoid any type of systematic advantage or disadvantage an account may experience. Under virtually no circumstance will we deviate from our discipline. 1.3 Key to success. Probably the single most important factor that defines success in the investment management business is performance. Thus, one of our primary goals is the achievement of a rating by Morningstar, an organization widely known by both individual and institutional investors for its mark of accreditation in the mutual fund industry. To be rated by Morningstar, fund must have a minimum performance industry of 3 years. Company summary. Vista Investor will be structured as a partnership designed to capitalize on industry research performed by one of the founding entrepreneurs, Michael Douglas. This company is unique because it differs substantially from the way most existing investment management firms organize. Most of the firms created in the last 25 years were started by the departure of portfolio manager from the nation's largest bank, insurance company, and brokerage firm. Generally, these individuals were deep in investment research talent but noticed as it concerned the business and operating side of running an organization. The business plan for Vista Investor is different. Vista Investor is to be created by someone deep in knowledge of all aspects concerning investment management organization. Investment talent will be acquired and retained by offering key individual competitive comprehension to include equity stake. Biographic for individuals selected for the management team are enclosed. 2.1 Startup Summary. The following table shows our startup recruitment and planned funding. Gateway Financial, Startup Recruitment and Startup Expenses. Legal, $2,000. Stationery, $200. Brochure, $300. SEC filing, $1,200. Insurance, $300. Research and development, $1,500. Orders, $500. Total startup expenses, $5,000. Startup asset, cash required, $20,000. Other current asset, $0. Long-term asset, $0. Total asset, $20,000. Total requirement, $25,000. Market analysis summary. Much of our analysis focused on the mutual fund segment of the investment industry because it is such a large component of the overall landscape. We have additionally provided information as it pertains to the management of separately managed portfolio, example, separate account. To understand the data here, one must understand that separate account manager must register their firm with the SEC. Thus, they are known as registered investment advisor. For Vista Investor, the technology we have selected will enable us to capitalize by utilizing both product type, mutual fund, and separate account. Our analysis supports the 20% to 25% project growth rate by outside source. Probably, the most important aspect of this projection are the factors that will fuel this rate of growth. The following section contains some of the key variables to creating this growth environment. All are expected to have a positive impact on the investment industry for at least the next 3 years. Market analysis, potential customer, mutual fund, growth at 20%, 4,500, 5,400, 6,480, 7,776, 9,331. CAGR at 20.00 point. Potential customer, separate account, growth at 25%. 1,100, 1,375, 1,719, 2,149, 2,686, and CGR at 25.01%. Total 21.03%. 5,600, 6,775, 8,199, 9,925, 12,017. CAGR at 21.03%. 4.1 Business Participant. The number of participants in the investment industry is large. They range from provider of a single investment product to multi-product firm with literally hundreds, if not thousands, of investment product offering. The several trillion dollars industry certainly has the size to support a large number of firms. However, many participants are not complete firms as it pertains to the capability required for success in today's, but more importantly, tomorrow's environments. 4.2 Target Market Segment Strategy. Our target market will be highly dependent on the stage of our product in its development cycle. Most of the marketing opportunity will occur beyond the first year of product development. However, some initial opportunity do exist. For example, the firm can utilize its transfer agent distribution service, which will put the product in a highly visible online platform. Additionally, opportunities include marketing to programs that invest specifically in emerging managers. Furthermore, the high net worth and retail marketplace can be accessed to a limited degree, even in the early stage, through similar creative opportunity and already established relationship with clients. Like manufacturing organization, investment management firm must develop product to provide to their customer. This plan provides substantial market analysis to support the trend expected to occur in the field of investment management and the type of investment product that will be demanded. Vista Investor hallmark product offering will be the Vista Total Market Equity Strategy, an investment product offering based on the evidence supporting investor desire to outperform the overall market via a single, diversified vehicle and to avoid the need to create complex investment structure such as those employed by institutional investors. 4.3 Positioning Statement. While it's important to show some level of consistency with the latest trend in the industry, it's more important to provide a solution that will stand the test of time. The decade of the 1990s is littered with examples in which individual investors have chased past performance and have sought unrealistically high returns by investing in recently hot investment vehicles, often concentrate in niche areas such as technology-specific fund, example Internet Mutual Fund, or style-specific fund, example Small Company Growth Mutual Fund. The hard-learned lesson for individual investors are the past performance is no guarantee of future performance, and that the market tends to favor one area for a period of time only to unpredictably rotate in favor of another area at a later time. Additional support for our strategy come from the tendency for individual investors to mimic the strategies they see utilized by the nation's largest institutional investor, example pension fund and university endowment. Because of their size, institution investors allocate their assets to various portions of the U.S. equity market, example large cap growth, small cap growth, large cap value, small cap value, and etc. By selected investment firms and products that are specialization in certain area, their structure are complete, and as research content herein suggests, inefficient as it pertains to the average investor. In fact, a prominent investor consulting firm is advocating what they call word portfolio strategy for institutional clients, where the overriding feature is to reduce the they have observed in their institutional client portfolio. We are extremely encouraged about the outlook for our total market portfolio strategy. One of the underlying tenets of NOOP study mentioned in section 1.0 is that specialization within equity portfolio management has gone too far, thus resulting in suboptimal portfolio. Many portfolio piece together numerous manager, resulting in index-like structure at high fees that are incapable of providing the performance sought after by active portfolio management in the first place. In fact, the study estimates the annual cost to institution of operating a multi-manager portfolio at 1.20%. This is a high amount when considering the negative effect this will have on a portfolio health for the long term. Additionally, we can state with nearly 100% confidence that this cost is even higher for individual investor. The prescription to institutional investor by the study is to embrace the entire opportunity set represented by an asset class via utilization of more simple structure. Simply put, we concur. We'll go one step further to purport this even more important as it applies to individual investor. The level of acceptance of whole stock portfolio among institutions remain to be seen. Some institutions may find difficulty with the concept simply because the large size of their portfolio make it prohibitive to reduce the number of managers within their portfolio. However, this concept is one to be embraced by individuals because it simplifies their portfolio, while at the same time reduce the need for outside counseling. The trend toward more simplified portfolio structure is simply a reversion to the way things were prior to the specialized categories and level developed for equity product over the last couple decades. 4.4 Service Business Analysis. The investment industry is a classic example of a traditional industry embracing technology to become more efficient. It is clearly fragmented, and while the past few years have seen some consolidation, fragmentation will remain due to the differentiation in investment product, both real and perceived. It's important not to understand the complexities of this industry, while measured by some measure a dynamic change, example, advancement in communication and other technology, and a positive environment for investing have created opportunities that will perpetuate well into the next decade. The investment industry is complex, it has many moving parts, and it experiencing dynamic change. If this was not the case, opportunity properly will not exist. By Mike Douglas. The beauty of investment management is that great economy of scale can be achieved with successful investment product offering when organized efficiently and provided with the appropriate technology and support service. The size and number of accounts become irrelevant. Essentially, the underlying portfolio is the same. Additionally, related product can be easily derived from the main product platform. At a recent investment conference, the CEO of IO Mega stated, derivative products are important in any industry. We will certainly agree. Thus, we have provided for introduction of closely related product to be launched during the latest stage of our startup. These derivative products include a balanced product, our total market equity strategy combined with a non-proprietary fixed income product. A large stock product, the large cap portion of our total market equity strategy, and an extended market product, the mid and small cap portion of our total market equity strategy. As an investment track record is developed, market is opportunity expand. Additional, a successful product can be leveraged into derivative product, thereby increasing asset gathering potential. A study by Merrill Lynch showed that mutual funds with 4-star or 5-star rating account for 74% of net asset flow over the last 4 years. However, there are virtually no guarantee when it comes to investment performance. This is evidenced by the SEC mandated disclosure attached to all mutual fund disclosure. If a firm takes all the steps to stack the deck in its favor, the probability of achieving the desired success is significantly increased. In the following section, we outline a plan that identifies the right people to execute the investment process within an environment conducive to efficient investment management practice. As it pertains to the investment management industry, a properly stacked deck, example, the optimal organization, is a competitive advantage that cannot easily be achieved by many of the firms in existence today for a variety of reasons. 4.4.1 The 3 P. There are 3 P commonly associated with investment management organization, which is people, process, and performance. The period to determine the latter. While this proposal highlights many areas, market research, financial projection, there are only 2 areas that will ultimately determine the level of success achieved by this group. The first is the pupil, bright, energetic, talented, and knowledgeable individual compose the core of the team presented to you. In addition, research explains that the most qualified investment professionals are attracted to efficient firms that are free from bureaucracy and that align interests via equity stake. Process is the second critical element of this proposal. Cutting-edge research is provided in support of our portfolio management process. The implementation of our process is maximized by outsourcing virtually all functions not related to portfolio management and research, thereby exploiting the firm's human capital. Management summary. Vista Investor has compiled a preliminary management team and has candidates for other key positions. This information is found in the following section. 5.1 Portfolio Management Team. Michael John Douglas, CIO and Portfolio Manager, is responsible for execution of the investment process. This includes management for all of the team's research activity. Mr. Douglas' most recent position is that of principal within the Portfolio Strategy Research Group at the First Union National Bank. In this position, he has responsible for conducting investment manager research resulting in the selection of investment manager to be used with the firm high net worth and institutional client. Various positions include that of senior analyst for a consulting team at Wilshire Associates, where he was responsible for advising on the investment decision of pension funds, university endowment, and insurance companies. His career includes 6 years of experience researching and evaluating investment management organizations. Mr. Douglas earned a Master in Business Administration from the University of Notre Dame. He also holds Bachelor of Science degree in Industrial Management and Economics from Carnegie Mellon University. Currently, he is a member of the Association for Investment Management and Research and the Jacksonville Financial Analysis Society. Mr. Douglas is also a candidate in the CFA Chartered Financial Analysis Program. Mark Francis, hence Senior Portfolio Manager, is responsible for conducting company-specific research, including execution of research assignment, idea generation, sector or industry analysis, and contribution to the firm overall
Hi,
economy.
my name is Muhammad Kamal Bidramahari. I'm the next presenter for this group.
Mr. Hans' most recent position is that of Assistant Portfolio Manager at ING Pilgrim Investment. In this position, he was part of the team responsible for the management of retail, closed-end fund and several private collateralized loan obligations consisting of nearly 5 billion in high-yield senior debt security. Pure positions include that of Assistant Vice President and Financial Analyst with both Northwest Bank and Bank One, where he was responsible to financial analyze use determine the creditworthiness of the firm's client. His career includes 7 years of experience pertaining to financial statement analysis and credit underwriting. Mr. Han earned a Master in Business Administration from the University of Dam. He also holds a Bachelor of Science degree in Finance and Human Resource Management from Morehead University. Currently, he is the member of the Association for Investment Management and Research and the Phoenix Financial Analysis Society. Mr. Hand is also candidate in CFA program. Senior Portfolio Manager CFA is responsible for conducting company-specific research, including execution of the research assignment, idea generation, sector analysis, and contribute the firm overall economy outlook. This individual most recent position is that of portfolio manager at a major investment firm in Northeast. As portfolio manager, the person manages a communication technology mutually found with assets of approximately 1 billion per position, include the technology industry analyzed with the same firm. The person career include 8 years of experience performing security analysis. This individual earned a Master in Business Administration from Carnegie Mellon University. The person also holds a Bachelor of Science degree in Industrial Management from Carnegie Mellon University. Currently, the person is a member of the Association for Investment Management and Research and of a local financial analysis society. This individual is CFA chartered holder. 5.2 Position being held by fellow founder. The following position will be held by fellow founder following the first round of primary funding. Operation Director Yap Jui Leung, Marketing Analyst Sylvia Tan, Portfolio Management Assistant Nadine, Administrative Assistant Muhammad Kamal, Board of Direction, no salary, all founders. Retention of human capital is critical in the investment management industry. Our firm has identified potential benefits proven for medical and retirement. Worth noting is that the retirement plan platform will allow employees to invest retirement saving investor mutually fund product. Non-property product will also be included to fulfill the requirement of Section 401(k) of the tax code for diversity amongst product offering types. 5.3 Operation service to be outsourced. Fund accounting and fund custodian likely to be State Street Bank in Boston. Transfer agent likely to be PFPC, a mutual fund service provider owned by PNC Bank. Legal data service various. Personal plan, Chief Investment Officer, CIO. First month 51,445, second month 56,590, third month 62,248. Vice CIO, first month is 51,445, second month 56,590, third month 62,248. CFA, first month 51,445, second month 56,590, third month 62,248. Operation Director, first month 39,134, second month 43,047, third month 47,352. Marketing Analyst, first month 29,351, second month 32,286, third month 35,515. Portfolio Manager Assistant, first month 2,000, 22,826, second month 25,109, third month 27,619. Administrative Assistant 19,571, second month 21,528, third month 23,681. Total pupil first month, second month, third month is 6. Total payroll separate account management service reviewing service by ewebportfolio.com and TD Waterhouse Institutional. Vista Investor has received the domain name vistainvestor.com for purpose associated with this business. Strategy and implementation summary. The key to marketing an investment product is develop a successful product, develop a pattern of success, and show that the pattern can be repeated in the future, after which time successful product should be aggressively marketed if capacity to manage additional asset exists. Will a 3 to 5 year period may seem like millennia compared to the technology world, it's really quite reasonable considering the fact The private equity investor in the limited partnership vehicle are generally stratified with a 10 years waiting period that exists prior to a return of their capital investment based on the development timeline associated with investment product. This plan provides a financial outline of Vista investor funding requirement for the first new year of operational. Point 1. Sales strategy. Investment management fee. First year 18,000, second year 104,000, third year 560,000. Order for first year, second year and third year is 0. Total sale for first year is 18,000, second year is 104,000, third year is 560,000. Direct cost of sale for first year, second year and third year is 0. For investment fee, other same is 0 for first year, second year and third year. Subtotal direct cost of sale is for first year, second year and third year is 0. Our firm hallmark investment product will be Vista Total Market Equity Strategy and will be initially offered through an SEC registered mutually fund. Technology investment also permit for other economically feasible distribution channels such as specially managed portfolio for large account size. We recommend using a life plan as the easy way to create automatically financial for your own business plan. 6.2 Database. A property database has been developed to monitor this and other factors including our reason for purchase or sale. Purchase candidates are categorized by one of the following. Number 1 is value, cheap based on comps valuation, measure relative value, franchise value, discount cash flow value, and catalyze or change it will cause price to appreciate. Second is relative value, middle ground. Third growing faster than market average, but price does not represent realizable growing opportunity. Turnover. We expect to turn over approximately 1/3 of portfolio each year. This is consistent with an average holding period of 3 years. In generally, we would like for all holding to be long-term investment. We attempt to identify stock with which we would be comfortable with if we were look in for 3 years. This force used to look beyond short-term noise in quarter-to-quarter result and focus on the big picture, such as management vision for the future and the probability for executing their plan. However, we do realize that quick price change, especially for volatile market, may cause us to realize gains or lose sooner than unanticipated. Financial plan. The primary goal of the first full quarter of operation from July to September 2001 will be to secure funding from outside Square. Pouring to this point, Vista Investor has a budget of $25,000 to be used for finding investor, forming a legal partnership and registration the firm and its product with the SEC. The amount of the sought from investor will be approximately is $1 million, which should see the business drop to profitability near the completion of the third year. This break-even point caters roughly to an asset under management level of approximately $100 million. 7.1 Exit strategy. All employee of the firm will be required to sell back their owner stake upon retirement. The ownership incentive remain eligible with those active participate in firm activities. This requirement does not apply to venture investors contributing to the upfront financing of our internal operating budget. Exit strategy will be negotiated with venture investors on any case-by-case basis. This will include the term of investment partnership. 7.2 Financial Risks and Contingencies. The following highlights some, but currently not all, of the risks associated with this business plan. Market risk. A high correlation exists between the growth rate of the investment management industry and the performance of equity markets. While advanced suggests a conducive environment for equities in future, no forecast can be made with absolute guarantee. Performance risk. At the end of the day, our products are measured by their performance. Will the goal is to achieve competitive performance over 3 to 5 year time period. Short-term period may result in underperformance based on the critical measure outlined in this plan. For this reason, it comes common for newly created venture in the investment management business to seek funding for an operating budget covering 3 or more years. This is consistent with the Vista Investor financing plan. Business operating risk. Beyond the third full year of operation, assets under management must produce revenues that will be sufficient to support operation in the entirety. Otherwise, our option will be to acquire additional funding or reducing costs, because investors are our highest priority. We will not take action that will jeopardize our investment product. Costs are unlikely to be reduced below the already modest forecast of our financial statement. As categories, we would first consider outside funding, the sale of our firm, the sale of one of our products, or other feasible alternative. that would stand the productivity of the highest quality investment product. 7.3 Important assumption. The following table proves the some assumptions that are key to success of Vista Investor. General assumption: plan month 1, 2, 3. First month, second month, and third month. Current interest rate for first month is 10%, second month is 10%, and third month is 10%. Long-term interest rate for the first month, second month, and third month is 10%. Tax rate for the first month, 25.42% for first month. Second month is 25.00% for second month. For the third month is 25.42%. For other, for first month, second month, and third month is 0. 10.5 Project Profit and Loss. Vista Investor profit and loss information can be found in the table below. Sale for first month is 18,000, for second month is 104,000 US dollar, for third month is 560,000 US dollar. For direct cost of sale for first month, second month, and third month is 0. Others for first month, second month, and third month same, 0 US dollar. Total cost of sale for first month, second month, and third month is 0. Gross margin for first month is 18,000 US dollar. For second month is 104,000 US dollar for second month. For third month is 560,000 for third month. Gross margin by percent for first month is 100%, for second month is 100%, for third month is 100%. Expense for payroll in first month is 295,217 US dollar. For second month is 291,739 US dollar. For third month is 320,913 US dollar. For sales and marketing and other expense for first month is 26,500. For second month is 45,800. For third month is 87,718 US dollar. For depreciation for first month is 600. For second month is 1,733. For third month is 1,700 US dollar. Utilities for first month is 1,575 US dollar. For second month is 1,545,000 US dollar. For third month is 14,600. Insurance for first month is 1,500. For second month is 14,175. For third month is 0. Rent for first month is 13,500. For second month and third month is 0. Insurance for first month, third month is 0. First insurance for first month, second month, and third month is 0. Thank you.
Thank you, Kamal. I am Sylvia and I am going to talk about pro forma cash flow. So, EBITDA stands for earnings before interest, taxes, depreciation, and amortization. For the first month is $330,075. Meanwhile, for the second month is $293,020. For the third month is $88,570. For the interest expenses is zero for the 3 month, and for the taxes incurred for the second month is for the first and second month is zero. Meanwhile, for the third month is $22,080. And the cash sales for the first month is 18,000. Meanwhile, for the second month is 104,000, and for the third month is 560,000. And subtotal for cash from operations is same as cash sales, and the net profit is $330,675. For the second month is $294,752. For the third month is $64,791. And for the net profit or sales additional cash received is negative 1,837.08%. And for the second month is negative 283.42%. For the third month is 11.57%. So for the 3 months of sales tax VA and VAT has ST GST received, new current borrowing, new other liabilities, interest free, new long-term liabilities, sales of other current assets, sales of long-term assets is all zero. And the new investment received for the first month is for the new investment received for the first month is 1 million, and the second and the third month is zero. The subtotal cash received for the first month is 1,018,000. Meanwhile, for the second month is 104,000. Meanwhile, for the third month is 560,000. So other liabilities, principal payment for the first month, second month, and month. So the first month, second month, and third month of other liabilities, principal payment, long-term liabilities, principal repayment, and other purchase current assets is all zero. And the purchase long-term assets for the first month is 15,000, and the second month is 5,000, and so is the third month. And the dividend of the 3 months is zero. Subtotal cash spends for the first month is $354,641. Meanwhile, for the second month is $401,800. And for the third month is $400,000. $92,977. The net cash flow is for the first month is $663,000 and $359. For the second month is $297,800, and for the third month is $67,023, and the cash balance is $683,359. For the second month is $385,559. For the third month is $452,583. Cash sale for the first month is 18,000. Meanwhile, for the second month is 104,000, and for the third month is 560,000. Subtotal cash from operation is same as the cash sales. Addition cash received. Sales tax, VAT, HST and GST received is 0 for the first month, third month and second month. And the new current borrowing is same as, and new current borrowing is 0 for the first month, second month and third month. New other liabilities interest free. New long-term liabilities, sales of other current assets, sales of long-term assets is all 0 for first month, second month and third month. Meanwhile, for the new investment received for the first month is 1 million, and the second month and the third month is 0. Subtotal cash received for the first month is 1,018,000. For the second month is 104,000. For the third month is $560,000. Expenditure for the year 1, 2 and 3. Cash spending for the year 1 is $265,270. For the year 2 is $291,739. For the third month is $320,913. And the bill payments for the year 1 is $74,424. For the year 2 is $105,061. For the third year, and for the third years is $167,064. For the year 3 is $164,064. The subtotal spent on operation is $339,641. For the year 2 is $396,800. For the year 3 is $487,977. For the addition cash spends such as sales tax, VAT, HST, GST payout, principal repayment of current borrowing, other liabilities, principal repayment, long-term liabilities, principal repayment is all 0 for first year, second year and third years. Purchase other current assets for the year 1, 2 and 3 is all 0, And purchase long-term assets for the first year is $1,500, and the second year is $5,000, same as the third years. Dividends is 0 for first year, third year, and second year. Subtotal cash expense for the first year is $364,641. For the second year is $401,800. And for the third month is $492,977. So for the net cash flow for the first month is $663,359. For the second month is $297,800. For the third month is $67,023. Cash balance for the first month is $683,359. For the second month is $385,559. For the third month is $452,533.
Hello, my name is Yap Julong and now I take over from Sylvia. So now I continue about the projected balance sheet. So in year 1, in current asset we will have 683,359. Other current asset will be 0. The total current asset will be 683,359. Year second is 385,559. Total also 385,559. This is because we have invested a lot of our asset cash in for our customer investment fund, and then to expand businesses, marketing, and a lot. So in year 3, we projected we will gain back around 100,000 because the investment return. Now look at the long-term asset. You see, the long-term asset is increasing from 15,000, 20,000, 25,000 because we are investing in a lot of good share and then it provide good return. Accumulated depreciation also, it will increase because we have a lot of usable items which will depreciate. So you will see the total long-term asset is increasing and the total asset is decreasing a little bit and increasing back because in the second year we invest and in third year we get return. So now let's look about the liability and capital. So the liability and capital will increase from year 1, year 2 to year 3 because we projected the loan more from the bank to increase our business expenses, increase to reach more customers. So you will see the current liability will increase. This is also the same with the total liability increase because we use this to expand. So let's talk about the pay in capital. So the capital will remain, but we will minus it with retained earning because we use the capital to earn, and then we see the total capital is decreasing in the second year and get up in the third year because the profit we project to earn. So the net worth and total liability and capital will be the same. Decrease in the second year and increase in third year because we earn back. So we projected a sales growth of 400 plus in the first 2 years because we need a major expansion, and then it will go to 1 digit because our business is stable in the third year. So you see the percentage, the ratio analysis, which the total current asset will be around 96 to 1 digit, around 4 to 5 in long-term asset. So it will be very stable since current asset has a lot of cash there. So in third year, because we are a steady business, so we will reduce the total current asset to 75% and then we will increase the long-term asset 25% because we don't need so much cash anymore. It's almost the same with the current liability and long-term liability ratio. Because in the first year, the all liability is current liability because we need to pay it up to expansion. But in the third year and fourth year, we will make current liability in a shorter ratio, and then total, and cost to reduce the ratio of current liability shorter, and then the long-term liability will be higher because we are in a stable business. So you see our net worth of the liability will maintain 90% plus, and then in the fourth year, because we are stable business, we don't need so big ratio of net worth. So now let's look at the sales. So advertising expenses to the sale will be around 20%, but the selling, general and administrative expenses were very high, from 2,000% to 400% to 80% maintained, because we need to expand our company in the first year, second year, then it was stable, and third and fourth year. So we projected loss in the first and second year because many business is also the same losing in the first and 2 year, and then the third and fourth year we will be gaining profit because we have a stable business background already, a stable customer segment. So let's look at the main ratio, total debt to total asset ratio. You can see total debt to total asset ratio in the first, second and third year will be very short because we don't have a lot of debt. But in the fourth year we will borrow a lot because our business is stable and able to pay debt. So we can see the pre-tax return on net worth will be negative in the first 2 years. Pre-tax return of the asset will be negative in the first 2 years because we are making loss. But in the third and fourth year, we will be making profit because we are a stable customer segment. It's the same with the net profit margin and return on equity, ROE. First, second year must be loss, and then third year we projected the profit. Account payable turnover will maintain around 12%. Payment debt is the debt that we have to pay the debt. We will maintain it around 25 days, and we will get some extra in the second year we projected. So the total asset turnover will be around 20%. Not 20%, sorry, 0.03% to 1.2%. So let's look at the debt to net worth ratio. So the debt will be very, very low, 0.01, 0.02, 0.03 increase to year because we have a lot of debt in the stable business when the business becomes stable. But the current liability will be maintained at 1. So liquidity ratio, net working capital will have a lot in the first year because we gain capital the aspect of our business. Second year will be totally half gone because it used to aspect of business, and then in the third year it will increase because our business gain profit. So the additional ratio, asset to sale will be very high in the first year and then slowly decrease because we don't have a big sale with very less of asset. So we don't project any dividend payout. So no dividend payout until we have a very stable and current in profit. Thank you. Finally, we come to the conclusion with a lot of number, ratio, data, introduction, here, this and that. I think it will feel easy, but conclusion will make you understand in a simple way. So this is an investment consulting firm founded by 6 founders, who is Michael Douglas, Mark Henders, me Yap Yulong, Sylvia Tan, Kama, Siti Noshafika Nedi. So this company will receive investment funding from other investors for operational and startup funding. This company will help customers to invest in valuable security in United States financial market and earn commission and profit from it. So we are an investment company with 6 founders doing each job, and then we receive investment fund from other investors to become our shareholders for startup funding. We help customers to invest in valuable US stock, in New York Stock Exchange, NASDAQ, and we earn commission and profit from it. Thank you very much. I hope that this business presentation will make you have a great understanding of how to start our investment consulting fund. Sorry if we made any mistake, and I hope you enjoy this video. Thank you very much.